Hello traders, this is day number 35 of small cap market open trading. I've written a plan specifically to trade small cap stocks which are notoriously volatile and unreliable, but also a favorite of new traders, and they often cause new traders to blow up their accounts. So my idea is to have a plan in place that's relatively easy to follow that can allow you to take up to 100 trades, probably a lot more, without damaging your account. So far we are 50 trades into this test. We've been trading with one single share. That's how we keep it from blowing up your account, just in case it's not profitable. But the plan is profitable so far, and I go over all of the results on an ongoing basis every single Sunday. So let me show you the two trades that I took this morning, and then I have to show you something on my plan that is going to affect the next handful of days of trading, and you'll know exactly what I mean in just a moment. So first, let me show you the screener that I use to pick these stocks every day. So here is my small cap screener. Always click those three little dots and click modify, and then organize the list by volume. Now I'm looking for stocks that are green 5% or more, that have 500,000 shares of volume or more right at the open. It's a little bit later now. So let's take a look at the video and see what I traded this morning. So first, you're going to see me pull up stocks that met my screener criteria but did not necessarily meet my chart criteria. So here's GGPI, which looked good on the screener but did not have the requirements on the daily chart. All of that stuff is written in my trading plan. It's very specific, very easy to follow. KZR, that one met the criteria, but the price needs to break out through that previous high, and I don't think it ever did. So, and then PLBY, that one met the screener criteria and the chart criteria. Eventually I remove it because it fell off the chart, and that's one of my rules. That's something in the trading plan, is never to trade anything that is not on my screen. Not fell off the chart, but fell off the screener. So yeah, if it's this whole plan is based around picking stocks off of my screener criteria. So if the stock is not on the screener anymore, then I'm not supposed to trade it, because otherwise, whether I win or lose, the data doesn't mean anything. So let's move on here. So here's PLBY, came back onto the screener. So I pull it back up on the chart, and you can see that it broke out through the previous high. It established a high of day, and then pulled back from that high of day, and then established a second high of day. So all of my criteria to take an entry are met. Once this happens, then I'm just looking for a 1 minute candle to make a new high to get an entry. So here you can see 36.86, I believe, was the high of this candle, and I'm looking for, sorry, 36.69 is the high of this candle, so I'm looking for 36.70 or better. It does happen, I believe, on this candle, so let's hold up here. So watch the price bubble. There it goes. It went to 36.72. I hit my hotkeys immediately. I get filled at 36.75. That's not that bad of slippage for a stock this price. So now we're going to pull it up on the big chart. So I wasn't quite sure where I wanted my stop, but ultimately it didn't make sense to keep it down this low, so I moved it. My plan says to place the stop at the previous low of the 1 minute candle that I enter on. That would have been this candle right here. The only exception is if I enter after consolidation, and originally when I first got into this stop, I was kind of considering this consolidation, but I kind of quickly realized that's not really the case here. This is an obvious short-term downtrend and just a reversal here. So I moved the stop back up. That reduces my risk, and it gives the trade a better chance of working out because it also lowers the profit target. So let's move on and see what happens. So there's where I adjust my stop and put my profit target in the appropriate place according to that stop. Then it's really important for me to mark out where my ideal entry was and where the profit target would have been had I gotten my ideal entry, meaning no slippage. If that gets hit but my profit target does not, and the stock comes down and stops me out, then I'm done trading for the day, because that means that a 2R trade, according to my plan, took place, but I just did not get in properly, or didn't execute it properly, or caught some slippage or whatever. So that's just a sign to stop trading, but that's not what happened today. Just giving you some insight on the plan there. So it comes up very near my ideal profit target, not too close to, about 50 cents away from my actual profit target. and then starts to come back down. Now that's where a lot of, I mean, I don't know what a new trader would have done there, because this thing is moving really fast, but they probably would have gotten scared when this thing started to turn around. But you see how quickly it comes down. I mean, you would have turned this into probably a half-hour trade very quickly if you were a new trader. And the problem with that is, even though, oh great, it would have been a green trade, is that if you do that on a regular basis, you're never going to hold to your 2-hour profit target. All of your winners are going to be half an hour, quarter of an hour, something like that. And then when your stop gets hit, they're going to be -1 hour. So it's going to take you 4 or 5 trades to knock out one loser, where when you hold to the 2-hour profit target or more, in this case, only one winner is required to knock out 2 losers. So that's how this all or nothing risk management works, and that's why I just hold to 2R no matter what. Either my 2R profit target gets hit or I get stopped out for a -1R loss. In either scenario, I'm happy. Obviously, I prefer the profit target to get hit, but either way, I followed my plan 100%, and that's what matters. And that's why this plan is profitable so far. Why I'm profitable so far is because I'm following the plan 100% of the time. So let's take a look at what happened here. So it's looking promising again, like it's going to head back up. But it does stop me out. Let me just show that in real time. There we go. Here it comes. And then it's very important when you start to see these stocks come back down is to define where your kind of moment of weakness is for the stock. If the price gets below this level, I consider the stock to be weak, and that's based on the price action. So if the stock would have come down below that red line, then I would not have been able to take any more trades, and this would have been a -1R day. But it did give me another entry before coming down below that line. And this trade, this second entry you're going to see me take, statistically is much more likely to work out. Over 50%, I believe, at this point. I've been tracking this for a long time now. And that's a pretty good odds, especially when your break even is 33% with all or nothing 2R trading. So that's something that you wouldn't hesitate to take. And it's much more likely to work out than my first trade. But nothing is guaranteed. 50% win rate, obviously, it means that half the time it's not going to work. So I don't assume that it's going to work, and that's why we have our stop loss in place. So let's move on here. It does consolidate a bit, and then it does give me an entry. As soon as a 1-minute candle makes a new high, that is my entry. So there we go. I'm in at 36.12. Now this is an obvious consolidation area, so I move my stop to the low of that consolidation area. And move my profit target in the appropriate place, but even before I could get it in, the price stopped me out. So that's going to happen. -2R day. There was no third trade, even though I'm allowed to take 3 trades per day, because the price you see immediately bounced down below that level. Now maybe it reversed around here and gave a 2R trade right afterwards. I don't know, but my plan does not allow me to enter once the price has come down below this kind of line of weakness. So if I do anything outside of that, even if it's a green trade, it's not going to help my tracking, which I'm tracking the results of this very specific trading plan. So let me show you a couple other things that took place today. So first of all, the only goal is to stick to the plan 100%, right? We don't necessarily care whether we're red or green. The main thing is, are we sticking to the plan 100%? And we are green so far because we're doing that. Let's see, this also came into play. Stop trading for the day if the stock you chose to trade breaks below the point A of the ABCD pattern. So that's exactly what we saw happen here at this line. When the price came down below that, it broke below point A of the ABCD pattern. I have a video explaining that pattern. And let's see what else happened. Every day you stick to the plan 100% is a good trade day. So today is a good trade day, even though it's a -2R day. So you have to keep in mind that not all red trades are bad trades, and not all green trades are good trades if you're not sticking to your plan and you're forcing the green trades. So a mandatory 1-week trading break is needed after every 50 trades. As I said at the beginning of the video, this was trade number 50, and the goal is to track 100 trades, but it's good to take a break every 50 trades. The last plan that I tested was a mid-cap market plan, and I broke my plan right around 50 trades. It was a little bit after. There's some other things going on, but that's when I decided, you know what, let me take a break every 50 trades. That's a good number. That's a good amount of trades. After doing the same thing over and over for 50 trades, you do tend to get fatigued. So it is a good time to take a 1 week break. So that's what I'm going to be doing now. I will still have videos out this weekend going over my swing trade and going over the results of this plan so far. But you won't see me trading, what's today, Tuesday, until next Tuesday. So, and that's the week of Thanksgiving, so it's probably going to be a weird week. But anyway, that's the plan for right now. And I will see you guys this weekend, and I'll see you next Tuesday. Of course, I'm still going to be checking YouTube comments and all that kind of stuff throughout the week. So if you have any questions, please feel free to leave a comment down below, and I'll get back to you. As always, go into every single trade with a plan and stick to that plan no matter what. Always take your stop losses, honor your profit target, and in the long run, you should be green. Take care.